And we're live, Howard.
Ivan!
What's going on?
So Ivan and I are going to catch up. It's our first Momentum Monday of 2018. And what a year it was, Ivan. You look good. We both haven't shaven.
Yes, we are competing for the biggest beard, I guess.
Okay. This market is just a powder. It's a powder puff. Have you ever seen anything like it?
No, I've never seen anything like it. It's an amazing melt.
You haven't seen that much, but in your 11 years of life, have you seen something? I didn't even know you could grow a beard, by the way.
I mean, of course I can. I mean, 2013 has some similarities, but then again, there was a lot more volatility in 2013, and we had some 4 or 5% pullbacks. In this market, we haven't had a pullback that lasted more than a day. Like
Bitcoin now is pulling back. They got a Bitcoin watch button up on CNBC. That could be a sign that you should be buying it. They'll probably have a panic in crypto. And okay, let's get to the markets. No Bitcoin today. Let's get to the markets.
All right. So
there's strength everywhere, right? There's strength in banks. Goldman breaking out today. We've got biotech deals galore. We have Netflix hitting all-time highs after the market, and I'm sure you have some ideas. So here we are, the S&P. I don't know.
This is the weekly chart.
What's amazing is people are shorting this. Like, the temptation, I think, to be a hero. Oh, my goodness.
Well, no one believes that it can continue, but it keeps going. I mean, there is a new sector rotation every week. And, last week it was the semiconductors. This week is biotech. 2 weeks ago, it was financials. Every week there is a new sector leading, and this is why the S&P 500 doesn't pull back, because every single week there is a new sector that...
Shit, I was looking at Pepsi's breaking out, STLD, which is a steel stock, Oracle's breaking out.
Oh, with the S&P looking like this, I mean, if your stock is not breaking out, there's something wrong.
Yeah, I agree. It's just a bull market. People it's fun. But there's no skill right now. It's just get long, be directionally correct here.
The S&P 500 is already up almost 7% year to date. And if you were not fully invested coming into the new year and you're a professional money manager, you're basically underperforming and you already have to chase, basically.
Oh my goodness, 7% on the S&P in January?
Yeah, I think 6 or 7%. I think something like this. Yeah, it's up a lot.
That needs to be a record.
Yeah.
Well, the other side of this, I'm not going to worry about it right now. I mean, so everything's clear. Listen, there is going to be, you're going to get trapped. You cannot time this. You're going to be long when this market turns, and you have to deal with that at the time. But you can't chase entries. We've been talking about this thing for 3-4 years, this bull market. And obviously it's the first Momentum Monday in a while, but it's just paid to ride this trend. Okay, so within the S&P, let's look at, today was Goldman breaking out, which is great for banks.
I mean, yes, the 10-year spread has been rising.
It's a laggard. I'm just saying, Goldman's a laggard, but I have a feeling it could play catch up over a week or so. So let's take a look at that.
Any financial or any regional bank.
One of my favorites, Shopify, had been a laggard. Now it's breaking out, SHOP.
Well, I mean, a laggard in relative terms after being
a laggard over the last 2-3 months. A lot of short sellers. It's a stock that I've recommended and I'm long in my portfolio. It's nice to see that catching up. So Goldman and Shopify are kind of the laggards. If you look at financials, we look at Schwab, just pure play on cash, strong. Noah, which is the Chinese Schwab, I like to say. Unbelievable. Seems unstoppable. So you've got e-commerce with Shopify. You've got Netflix gapping higher.
Yeah, it's almost 250 in after hours. So
unbelievable. It's unbelievable. I don't know how you can find entries. So where are there some entries? Tell me how you look at it when a market's just extended and goes up only. How are you looking at things, Ivan?
Well, I'm looking for stocks that have consolidated recently.
about this.
there are not that many good weekly setups, but there's some good daily setups. So apparently, I trade on a shorter time frame right now. And for example, I mean, I can show you a stock like, I mean, Take-Two, yes, it's kind of extended on a weekly.
Oh my God!
But then if you zoom in, there is a decent swing setup here. Setting up.
Explain swing trading. It's been a while since we talked about. Explain, as I'm a long-term trend follower, and you and I work together. I focus on big ideas that could last for 5 to 10 years, catalysts, and people know what I do. But Ivan, let's refresh people about swing trading because we work on this.
Yes. So from my perspective, there are two main ways to approach the market. One is to search for big winners, several big winners in a year. Your approach. Where your goal is to capture a 50 to 100.
That's because I'm not staring at the screen all day. I mean, your job with me is to stare at the screen all day.
50 to 100% move, and then you're willing to go through 15, 20, 25% drawdowns along the way. And then the second approach is swing trading, when the goal is to capture hundreds of smaller moves, of 5 to 20% moves that would last between 1 and 3 weeks.
Yes. So the millennials love this. And by the way, swing markets do not exist all the time, but it's been a good swing market.
Exactly. I mean, there is no approach that works all the time. There are times when swing trading doesn't work, and you're better off either being on the sidelines or just adjusting and using a different approach. In the current market, it continues to work very well. So there are two major ways to approach swing trading. One is to buy, after a breakout or during the breakout, and the other is to buy in anticipation of a breakout. For example, if you find a name that is
look at one we did recently that's not working as of today, IIBI. So I put that on.
The semiconductor play, yeah. Mm-hmm.
Yeah. So you can see why I did it. I take sometimes a little extra risk in a strong market. I haven't dug in too deeply on this deal, but I'm fully got enough positions on. But I saw this setup. It's in a strong sector. Took the trade, but you can see the loose volatility around this stock, and I just got my ass handed me today. I didn't take a loss yet, but
all those
looked like a swing trade. Did it not look like a swing trade, Ivan?
I mean, yeah, you can say so. Over here. In anticipation of a breakout, but then you stop should have been here, so you should be already out. But all of the names, all the semiconductor names that looked amazing last week, were hit heavily today, and
so it was the whole sector.
Yeah.
Huh. Okay.
But then in the same time, you have some major breakouts in biotech today. This is the XBI, the small cap biotech ETF.
Stretch that out a little bit. Stretch that out a little bit.
Okay, let's go to
because they were in a bear market in 2014. Yeah. So you can see the incredible run. This is what people need to remember about the S&P. We're in a really healthy market, so the corrections have happened. So we went through like a biotech meltdown after that great run up until 2015, 2016, and we can see the 2-year kind of bear market the biotechs remain in. But today they were really, filling that big monthly red bar back from the end of 2015. So this, the risk is on. I mean, between China, biotech, solar, steel, and risk is on. Bitcoin risk is on. Wow. So that's XBI.
This is the small cap biotech ETF.
So that's an all-time high. That's at an all-time high.
Yes.
Wow.
It just reached and basically the only two assets that are falling so far this year are the US dollar. I mean, this is why all the foreign stocks and emerging markets are outperforming, and treasuries. And this is why the 10 to 2 year spread is rising, and therefore banks' margins are rising.
Yeah. Yep. Okay, so let's go back to that biotech. So wow. That is really risk on. So what's the other biotech index? BIB or IBB?
So IBB, I think the way it is weighted, it gives a lot more weight to large caps, while the XBI, I think it's equal weighted, and therefore the small caps have a bigger influence because they're there are more of them in the ETF.
Well, this has Amgen and Celgene and Gilead. So let's just pull up Amgen, which I'm long. So Amgen has come back nicely.
New all-time highs today.
Is that an all-time high on Amgen today? Wait a minute. Wait a minute. Was that an all-time high on Amgen? Okay. So that's why the biotechs. Okay. So Celgene is a reason they're lagging a little bit. But they just did a huge acquisition of a cancer company today, CELG.
Yeah, and there are so many other bigger biotechs that are kind of setting up.
So small cap biotech, and I think I know why they're getting bought. There's a lot of acquisitions. So Juno got bought.
Yeah, Juno was acquired today.
Okay, so the small caps are getting acquired by the large cap. So the speculation makes sense. So Juno got taken out at like 80 something. Holy smokes! The stock was 15 at the end of the year.
Right here.
Okay. So this is crazy. And Sanofi bought a company today, SNY, which makes Ambien, my favorite product. It's kind of like my Nike. Is that what they bought? BIVV?
Yeah.
Holy smokes! What'd they pay?
Well, $105 a share. So
look at the stock was $40 at the end of the year. It's a three-bagger at the beginning of the year. So that's a small cap. I don't even think it's. I think they paid $10 billion. And let's take a look at Sanofi.
12 billion. Yes. What is the symbol?
I think it's SNY, Sanofi.
Yes.
They make Ambien. It's like the Nike of pills. So it's in a dog. So obviously, obviously it's off. I buy the knockoffs. I buy the what do you call them? The fake Ambien. So they're off of
generic groups. Yeah.
See how the large caps have struggled. Let's take a look at Pfizer, which I bought for my daughter.
Okay, let's see.
Even drug stocks are breaking out, or on the verge of breaking out. But in a market where it's going like this, the stock won't break out. But I have a feeling at the first sign of weakness, Pfizer runs 20% as a defensive play.
Yes,
but right now the risk is on. Look at ResMed, a stock that I've loved forever. They basically control the sleep market. It's the largest company that you could. They make CMS and rest machines. Yeah, RMD. Gapped up again today. I think it's up over 90 after market.
Yeah, it's been a strong trend. It's actually on the SL50 list.
It's on the SL50 list. So basically everything is strong. We've got biotech. Obviously there's a lot of people leaning in here. So it wouldn't take much for a pullback, but you can't time these things, and the tape is really strong. So let's go through the SL50 list. This is our list of 50 names. Not to be confused with my 8 to 80 list, which is a group of stocks that I own. Okay, yeah. So let's go through this list, Ivan. Tell people what you're seeing.
So currently we have foreign stocks, on the top of the list. Mercado Libre, which is the eBay of Latin America. They're growing very fast. Of course, Amazon is still.
I sold it. I'm killing myself. That thing just run another 100 points.
Yeah, Amazon is still a big threat, but I think there is enough room for both of them to grow. Just because.
Well, Latin American markets rallied huge last year, and they're the leading internet stock, so that's where the money flew.
Yes, and again, with the US dollar so weak and near 2-year lows, it's normal to see foreign stocks outperforming. Then you have Weibo.
So when the dollar's weak, the foreign stocks do better?
Of course, because most of their earnings are in their own currencies, and therefore when the dollar goes down, their earnings in dollars goes up. So of course.
It's been so long since the dollar was this weak. So should it negatively affect large U.S. companies with earnings overseas, or no?
Well, with the weak dollar, no. It's actually positive for big U.S. companies because most of their income is derived overseas. So
right. It's been so long since I cared. Okay, good point. Thanks for a refresh. Okay, Weibo is Twitter of China. It goes to show you how poorly Twitter is managed. Let's pull that chart up. Although I'm long Twitter, as people know.
Yes. So this is Weibo of China.
This is why the board should fall on their swords at Twitter. This is the Chinese Twitter.
And let's take a look at the US, the world Twitter.
Yeah. So, I'm hard on the company. I am long because it's just so massively the best product continues to be the best mobile social product. But now there's rumors the CFO may leave.
Strong market.
Not a normal pick by me. I should have just stayed long. I should have stayed long the Chinese version. But you can just see sometimes you can really prove how poorly a company is doing by what the copycat's doing in another country. Okay, so let's go back to your list.
I think there are good thoughts that there will be a catch-up. Twitter will catch up this year in a strong market, but you never know.
It needs a strong market. It's just not executive.
So you have the UBNT setting up for a breakout again.
Where's that stock at? I got shaken out of that. That was a target of short sellers. Oh my goodness, I got shaken out right at the lows in the low 50s. That was a target like Shopify was by.
Yes, Citron attacked them again. I mean, they always attack and then they always cover 20-30% lower. So it's a hit and run.
That was, I'm kicking myself because that product is really well liked. But I got shaken out. Okay, so that's on the list.
Okay, this is at the top of the list, of course. Some of the stocks will be extended. You have CAVM. I'm not really sure what they do. Let's see. It recently broke out. It has a huge gap, and now it's setting up.
It's in loose. There's just so many. I mean, amidst some of the trending, like the indexes that are trending, there's a lot of gappy. This stock is, more than doubled off the lows in 2016. Okay, not interesting to me, but obviously looks good.
Yeah. Okay, we have Zen. I think
we've owned for a while. That's now been on the list 13 weeks, so that's been.
This one is interesting. It's a recent IPO, IYX. It's a business software play. Well, yeah, it's a recent IPO. It looks kind of extended because it's a recent IPO, but other than that, it's not a bad setup for a short-term swing.
Just gone by, and the sellers that wanted to get out have gotten out, so that would have been an interesting breakout right here, back in the low 20s.
Yeah, I mean, many stocks look extended now, and it's normal. And it's
look at a couple other IPOs, Okta and Mule.
Okay.
This is a really interesting company. It's kind of the leader in single sign-on, just pulled back. So I think if you like playing IPOs that have strong companies and now have a year of trading under their belt, this one's interesting at all-time highs here.
Yep.
To close at all-time highs. MuleSoft is a financial software company that I hear great things about. Looks poised. Kind of eyeing that one myself. Okay, so that's IPO land. Let's go back to your list.
Okay, let's go back. So you have.
So a lot of you got Yandex, the Russian search engine.
The Russians, they recently broke out from amazing base, at the beginning of the year, right here. Let me go back a little bit.
Yeah, this is Russia's Google.
Yeah.
So you can see, I mean, it's amazing that I own this at some point. I just don't trust the Russian government, but congrats.
I think that they also have an investment in the Russian Uber. So it's a play on other.
The Russian Uber. Every ride ends up at the Kremlin, though. It's a little dangerous. Okay, so Yandex, if you'd like some exposure to Russia, they are the leading internet company in Russia, which is kind of a oxymoron since there is.
It's a Chinese biotech. It recently broke out also from a pretty decent base.
Can't get enough risk. Let's buy a small cap Chinese biotech.
Yes, of course, on the blockchain. Yeah.
On the blockchain. Oh my goodness! Wow. Well, we've done our work. Listen, I think we're here to tell you that if you're a short seller, you really should have your head examined. You are going to have your day in the sun, but there is just too many buyers in this market. I can't explain why. Obviously, it's not really important as a small investor to get too macro here. The idea is find a trend like this, these once-in-a-lifetime trends, and ride it for what it's worth. But stick with the great sector. Stick with growth that you can understand. When a market's this rich, you don't have to get fancy. If you don't understand biotech, there's no reason in this market that you can't find other ideas. If you don't like China or international stocks, there's plenty of great American companies. And
Yes, I mean, even take a look at Boeing. Like they've done amazingly over the past year or so. Like
Wow.
they basically almost tripled. And
Yeah.
that's why it's a huge company. Or Caterpillar.
Oh,
One of Jim China's favorite short targets.
yeah.
Well,
Well, the shorts are going to have their day. I don't see it. I don't see it yet. And congrats to people that have just stuck with a simple trend following investing model. I'm not going to muck it up for people, and we'll try and keep people updated here. Any ideas that you're looking at yourself on the swing trading side, Ivan?
Well, as I mentioned, IYX. Also, I mean, Qualcomm is
Yep.
kind of looking decent. It's a large cap, therefore a really slow mover. Last
Yep.
week we bought this is a Chinese education stock. Let me show it to you on a daily. It's a really recent IPO. They just broke out from here. So when you enter here, you can just put your stop here and just sell half on strength, and then just write the rest.
Yeah, and your handle on StockTwits is at Ivanhoff.
Yes.
And marketwisdom.com if you want to follow our your swing trading portfolio and have you in your corner mentoring.
Yeah, exactly. Marketwisdom.com. And on Twitter, I used to be Ivanhoff as well. Right now, I'm Ivanhoff too.
Yeah, what happened? So you got hacked. What a bummer.
Yes. They ported my phone number, and from there they took over my Twitter and my Gmail account.
And did you get? Did they get any of your Bitcoin or no?
Well, at the time I didn't have anything in Coinbase, so that was the main target. But definitely, if I had something at the time, they would have taken everything.
What's the lesson?
Well, the lesson is, don't rely on the telecoms, and don't use that two-step verification with your with the SMS system. Use right now I use something called YubiKey, which is like a physical.
Fred wrote about that. Yeah.
Yeah, so that's what I'm using. So just don't rely on the telecom to protect you, because they're not going to.
Yeah, what a bummer, buddy. Okay, well, it's a shame too that Twitter just can't get their shit together and help people like you that spent years building up your domain. So, again, it's a shame that this is part of life in 2018. All right, keep grinding, buddy.
Yeah. Okay. Thank you.
Okay, talk to you.
Bye.